morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is April 7th, 2013. Lots to talk about, so let's get started. But before I do, as always, thank you very much for hitting that like button, and as well as thank you very much for watching these videos. What I'm going to start doing, if you haven't already seen my previous video, is I'm just going to give you what I think the SPY is going to do, because normally 90% of the stocks within the S&P 500 will follow the S&P 500, because it's 500 stocks within that S&P 500. The SPY, however, is the ETF that tracks the S&P 500, and that is a tradable ETF. Therefore, that is why I normally do my analysis on the SPY, because it's a general overview. Now, the next thing I want to say is I'm going to try something new. I created a 7-minute market Facebook page, and so if you hit the like button on the Facebook page, anytime I make an update, you'll get updated through your Facebook account. Now, the thing is, please understand that I do have a full-time job, like most of you watching these videos, and I may not be able to get to the Facebook page as often as I'd like to, but it would be easier for me to do that than to actually create a video every time there's an alert or every time I make a trade or something like that. It's just making videos are just not, it's very time consuming. You have to create the video, you have to set up, and then you have to compile it, and then you have to you have to render it, and then you have to upload it, blah blah blah. It's easier if I just post pictures or screenshots or even just regular text on Facebook, and then that way we can also communicate with each other a little bit easier. I know a lot of you traders might have other trades that you might have in mind and that you want to share with other people, but just keep in mind that whatever I say and whatever I do on Facebook is just something that I'm looking at. Doesn't necessarily mean that you should be making a trade or not making a trade, or selling or buying, or whatever the case may be. It's just kind of like a vlog where or blog where I would just post what I'd be doing at that specific time, and of course, if you had any questions, then you can always post it there. Again, I'm a technical trader. I know nothing about the fundamentals, so don't bother asking me anything about that, because I won't be able to answer you in a in a smart way or intellectual way, that is. I just look at the charts, and whatever the charts tell me is what I do. So that's pretty much it. So what I'll do is I'll link a link, or post a link under this video to the Facebook page, and if you guys want to try it out, let's see how it works. And again, if I can't get to it as much as I'd like to, then I'll just shut the page down. But I'll still continue making these videos. Anyways, without further ado, let's get right into this SPY here, which is the ETF, obviously, that tracks the S&P 500. Oh, if you guys hear background noise, my inconsiderate neighbors they love to weed whack early in the morning, just so the whole neighborhood can wake up. And sometimes it's not the greatest having neighbors like that. But in any case, I do apologize if you guys can't hear this video. I'll try to speak up as much as I can, but we'll see. Alright, let's just get right into it here. In the previous video, I talked about this bottom trend line here, and if we had a close below that trend line and a validation below that, then we would definitely be probably heading down to at least this support level here, which is at the 50 moving average, and at this pivot point in between the gap window and gap fill. Normally when you have a gap window and a gap fill, if you have a pivot point in between, you'll normally get that support at that pivot point, and then of course you'll have another support level right at the gap fill here. So if you actually took a trade right at this pivot point here, it wouldn't be such a bad idea, because you would probably get some support at this gap window. But anyways, just like I said in the previous video, we didn't get in a close below this bottom trend line. However, what we did was we actually broke down through this bottom trend line, went right into this 154.10 level, and then we started heading higher. Okay, and so we closed up still negative 70 cents. So what does this mean? Well, whatever I talked about in the previous video still stands today. Okay, it still stands today. Again, let me see if I can just load drawings here. Alright, so again, if we get a close above the 157 level and then a validation above that, then obviously we'll probably head higher, and that high could potentially, it's a far ways higher, but it could potentially hit the 165.80. Again, these mathematical calculations are only if they hit it will you get a supporting resistance, but it's not saying that it will get there. Like any other support and resistance levels, it doesn't mean it's going to get there. It just tells you where the support and resistance is, where the psychology excuse me, it just means where the psychology lives within the general population of traders. And I'll get into that after I do this analysis here. Anyways, so I did say that if we did get a pierce through this 157 level, then I'll probably take the remaining trades, short trades on the SPY, which is buying the SDS long. And I did that. We broke through and pierced the 157 level. My stop out would have been the next day. We closed above the high. So this day here, which was the 3rd, if we closed above the second's high, which we didn't, then I would have stopped out. But instead, I picked up more shares, or I sold more shares, but I picked up the SDS, which is, you know, inverse to the SPY. I hope you guys just look up the SDS and you'll know what I'm talking about. It's a 2-time ETF reversal of the SPY, short the SPY. Anyways, as soon as we hit that 157 level again, it held one more time. And again, I can't, you know, it's the 157 level isn't as strong if it's already been hit. This one came close, and close to me is considered a hit. So this, I wouldn't have put all my money in, but I did take the remaining shares that I normally take. So let's just say, for example, I pick up 1,000 shares of SPY. My if I'm unsure and the indicators aren't 100% in my favor, and nothing ever is, well, at least 90% in my favor, I'll only take half. Well, I'm sorry, 90% in my favor. I'll take the full 1,000 if that's your normal buy-in or sell. But if it's not, then I'll do maybe 500 instead. Or if it's even worse, then maybe I'll do 250 or so on and so forth. You know, that's and I'm just using those numbers as examples. In any case, the 157 level held again, which was pretty cool. And then we broke down, and already, can you guys guess what I've done? I'll give you some time. Can you guess what I've done already the next day, which was the 3rd? If you guess, put a break-even stop, you're absolutely 100% correct. I already have a break-even stop on this trade. So even if Monday we spike, boom, this way, just like, I mean, we open around here and then we just continue higher, I get stopped out, break even, and what I do is I wait for the next resistance level to short again. Because and a lot of people say, well, why do you counter trend trade? Because right now the trend is up. Yes, that's true, but at the same time, the market is tired. It's you know, I'm expecting, I've been talking about this in how many videos, and it's just like, yeah, is it really going to happen or not? Well, obviously we have for manipulation in the market, right? We all know that, and that's why you protect yourself for break-even stops. And as long as you have this manipulation in the market, we're always going to have overextended markets like we have now. Right now, this market is tired, and it's going to want to correct, and it wouldn't be such a bad idea for the market to correct, because corrections in the market is normal. It's healthy for the market. So you just have to wait for that correction, and when that correction happens, then you start selling short, and then, you know, you wait for the bounce and you sell short again, and then so on and so forth. If, however, we kick up, say on, well, already this here, if I had taken, okay, so we have this bottom trend line here that we're watching. If I had taken the trade right at this trend line here, then that would have been fine. You know, taking a long trade, that is, that would have been fine, and I already would have had a break-even stop in place in case it continued lower, right? That makes sense. But if it continues higher on Monday, it's too late for me already. In my opinion, it's just not how I trade. If I miss it, then I let it ride, and the reason is, to me, that's considered chasing. And once you chase, it's very difficult or much harder to put a break-even stop to protect yourself, because you've already missed this move. So what do I mean by that? Well, if I had taken the trade at the 154.10 level, a long trade on the SPY, then I would be definitely in the money and I would have a break-even stop. But because I already missed this trade, then I'm just going to let it go till it hits the next resistance point and then take another short. And that's normally how I trade. And that's just the picture of the SPY here. Now, we didn't close below this bottom trend line here. They basically, the manipulation in the market, they saved it. And you know, if you look at the 10-minute chart or the intraday, I won't get into it in this video because it's just going to take way too much time. you'll see towards the end of the day, at least the last 20 minutes, you'll see huge spikes with huge buy-ins. Okay, that's manipulation. That's federal manipulation. I will give you a 99.9% guarantee that those are not retail traders buying in on the market. It just, nobody has that much money. Okay, so I just put it to you that way. Anyways, so we get the bounce already. Um, Keep in mind we have the 20 moving average right here, but it doesn't mean anything because we haven't continued down. If we continued down lower and then we went back into the 20 moving average, that would have hold some water, but we didn't do that. So bottom line is we still have not closed below this bottom trend line here. Okay, and even if we did, we have the 50 moving average right here lurking around. So what I would like to see is a close below this bottom trend line, obviously because I'm short the market. But again, if it goes against me and it continues higher to make another higher high, just like here, there's a higher high and then, there's a high and a higher high. So it's still in an uptrend. We have a low and we have a higher low and so on and so forth. So there's nothing changed that has changed in this trend. It's still going higher. But if it does go up and it breaks through this 157 level, I get stopped out, break even, and I wait for the next resistance point. I know I sound like a broken record, but I just want to hopefully most of you understand how I trade, the style I trade, and it's not necessarily saying that you should trade that way. It's just, how I protect myself against the manipulation in this market. Now, if we continue down on Monday, we need to get past this point here, which is this gap fill, this point right here, this gap fill, and the 50 moving average. That's going to have some support right here. So we could potentially get a bounce. If we do get a bounce, okay, and you haven't shorted yet, I would wait till it gets into this bottom trend line here again to initiate another short. Okay, just like I kind of talked about in the previous video. I don't know if that's going to happen because they saved it. Meaning, what do I mean by they saved it? They closed it above this bottom trend line here, which means the trend is still intact. Okay, just keep that in mind. And until we close below this bottom trend line, or better yet, below this 50 moving average, this market could still continue higher. There's nothing telling me otherwise, other than that the market's tired and overextended. Okay, we did this big move here on higher volume as well. Okay, and this volume was higher than the past, I don't know how many days, but more than 3. So this could potentially indicate a reversal. However, keep in mind that this does not follow my rules. You need at least 3 down days before you get a reversal candle, a valid reversal candle with a volume. So this could still potentially head lower. So what am I trying to say? Because I'm all scatterbrained right now. Simple. Just you review the last video. If you get a close below this bottom trend line here and a validation meaning a close below the low of that previous day, then we should be heading lower and the trend could be starting to change. If we close above the 157 level once again and we validate that, then we could potentially head higher. So just keep that in mind. Now the caveats. Next week starts earnings. Okay, so I believe AA is the first one that releases earnings next week, Alcoa. And with earnings, you're going to have a lot of manipulation in the market. Why? Because a lot of people like to play earnings, especially the options market. A lot of people like to straddle, strangle. They like to buy puts, calls, all sorts of things. And so there's going to be a lot of manipulation within the institutions. But here's the thing. Here's the kicker. I don't play earnings. If I'm too close to earnings, I will not make the trade simply because it's too risky. You can have good earnings and you can still see the market drop. Not the market, but the stock drop. So just keep that in mind. And a lot of stocks like Apple can drive the markets lower because they're so huge. So just keep that in mind. The following week, which is after next week, is the week that options expire. And we all know from watching these videos, that week, the third week of every month, or I should say the third Friday of every month within that week, it gets very volatile because, again, the retail trader can write options or write contracts for other people to buy, but it's mostly the institutions that do it. So the institutions don't want to lose money. So, I mean, you can investigate this thing called stock pinning, I think it was, or option price pinning, or something like that. I don't play options anymore. I used to play a lot of options in the past, but I don't do that anymore. I'm purely stocks now. But you can look that up because that will also affect the market itself as well. So we got earnings, plus we got the week that options expire. It's going to be, I'm expecting the markets to have a little bit more volume than it used to. Now, keep in mind that if the big time companies start releasing really bad earnings, that could be when the markets start turning over. So, just keep that in mind. So that's pretty much the analysis for the SPY. Just it's just pretty much the same as last week's one. So I just want to keep your eye on that. Now, getting into other things, let's take a look at the dollar. All right, this is a chart of the dollar, which is a UUP. I did an analysis on this in last week's video, I think, but I just want to kind of just do this live. I made this mathematical calculation here back in September 20th of last year. Okay, this line still holds, meaning if the dollar comes into this level here, which is $22.26, we got these two moving averages right here lurking below it. We should get a bounce if we get that low. Now everybody knows that the dollar is inverse to the market, so therefore if the markets do head down, if the dollar does head down or continue down, then the market should continue higher. Okay, so just keep that in mind. However, look at this right here. The dollar, we have this up move. And I know I talked about this, and it looks like we're just consolidating sideways, meaning we're building power, I guess you could say, to move higher. Okay, so just keep that in mind. But based on what I'm seeing here, it looks like it tried to multiple times, 1, 2, 3, 4, and then it tried to break out here. Actually, that's not really a breakout because we have this one here. So it looks like we tried to break out on the dollar. However, we were unable to do it, and we just sold off. Had a major sell off on the dollars, is probably from the all this money that we're printing. In any case, long story short, we do have a reversal candle here. It's a doji candle, but it's not on volume, so I don't know, and it's also not after a long run down, so I don't know if this guy has enough juice to push higher. However, if it does push higher, then what we're looking at here, we're already at the gap fill. This is probably why we got the pullback in the first place. So we got some resistance over there. We're gonna have some resistance here, but it's not gonna be very much, but it definitely will be some resistance there, maybe for intraday. And our next major resistance level will be right here. So if the dollar can get all the way up over here, then we may see some resistance. Ultimately though, it will be for a double top, and then that'll be that for that. Okay, so just keep that in mind. The dollar is inverse to the market, so do your analysis on your dollar. It's not tick for tick. Well, it's not for penny, and sometimes it's not tick for tick. But if the dollar's up and the market, then you can expect the markets to be down, and you can actually see that in real time in the intraday as well. All right, before I move forward and the other things that I wanted to talk about, I just wanted to make comments on the comments that you guys sent me. I appreciate that. Let's see. So there's a question about if I had a Twitter account or a chat room, and actually no, I don't. But that's what actually gave me the idea to possibly make this Facebook page. But we'll see if I can keep up with it or not. But if you have a Facebook account, just like the page, and then it'll be good to go. Jeffrey saying keep it up. Thank you very much. I appreciate that, because I was ready to actually just call it a day and just stop making the videos as often. Once a week is already not often enough in my opinion, but it takes up a lot of time. Fav Cole, can you do the XIV? Been watching a double top or head and shoulders. Let's take a look. Alright, this is the daily chart of the XIV here. Alright, so we have all these lines over here. Gee, I must have either done an analysis for you before, or yeah, because these were created in December of last year, and then these were created in February, and then this one was just a little while ago in March. So okay, so it looks like these lines are holding up, and again, the mathematical calculations aren't 100%. Look over here, we had the 23.79 level, we pierced through it, we closed, but we didn't validate, meaning we didn't get a close above that, right? And then we started breaking down. We tried to retest the 23.79, and then we just broke down. Created this reversal candle here on higher volume, which is why we got that that small pop. The small pop went right into this 21.07 level. However, in all fairness, I didn't create this mathematical calculation early enough, meaning it was, so this day was February 28th, and I calculated it on March 1st. So obviously I didn't catch it in time. I also created this 22.10 level, which didn't hold up very well. So we went into this 21.07, we broke through it the next day, and we broke through the 2210 level. But keep in mind, I know some of you are new watching these videos, so I'm just going to explain to you something here. These mathematical calculations were invented or founded in, I think it was 2011, December of 2011, so it's a little over a year old. The thing about these is a couple of things. Is it can these will be support and resistance levels in two different ways. It'll be multi-day, intraday, or gap. Okay, so everybody knows it's those three things. What do I mean by that? Okay, so intraday we could get an intraday bounce, meaning if we come into this line intraday we get a bounce, and then the next day we could just break down from it. Okay, so I'm not saying like this is the holy grail of everything. Again, I'm not trying to make money off of you guys. I'm just being honest. They're not 100% guarantee, but I will also say that nobody else has these formulas in the world that I know of, which hopefully nobody else will give out the formula. But instead of giving out the formula, I give you guys what the formula spits out for me. Okay. Now the gap. Here's how the gap works. We came close to the 2210. The 2210 level didn't hold up as good, but it actually did. Okay. Let me just zoom in over here. If I can just do it correctly. Okay. You see this candle here? This open, actually the close of this candle is 2212. That's 2 cents away from this 2210. What does the gap mean? So okay, so it's intraday, right? So we gapped above this one here, which is the 2107, but that one technically has already been used here. Okay, I just didn't do it soon enough. We came all the way into the 2107, but intraday we got that bounce. You see that? So you have multi-day, which is here. Multiple days we're down. We have intraday, which is here. One is intraday here, and then we come into it again as another intraday. So first is resistance, and now it's support. And then we have the gap, meaning it could gap above it. But if it does gap above it and it closes above it, which is the 2212, then you can expect it to go higher. I wouldn't make a trade based on it, but you know the expectation is possible. Okay, and I'll give you an example of another chart I have later if I have enough time. So there's just those three things that you have to watch out for, and that's why I don't say, oh, because I have a calculation here, I think that's where it's going to go, and so I'm going to go, you know, take a long trade. That's why I'm very cautious. Even though I have this mathematical calculation that nobody else has, I still include other analysis in there that are common knowledge, like the moving averages, you know, pivot points, stuff like that, because those are always going to work. Well, again, when I say always, it's never 100%, but what I mean by always is what I mean is the psychological aspects to how humans trade will never change. You have fear, you have hope, and you have greed. Okay. Anyways, I'm not going to get into that. Here's what I will get into. So we gap above this, right? And we trade, we come down into it, and then we gap up, and then we come down into it again, and then we break down from it, and then we have these two moving averages here that help us give us some support. It actually goes into the 2107, which gives it even more support, and it allows us to draw this bottom trend line here. Okay, so moving forward, we go higher, and then we come back into this line again, which is the 2210, again into the 2210, again into the 2210, and then we move higher into the 2379 once again, but this would be a double top, right? And I'm not sure if that's what you're talking about, Fabco, but that does look like a double top in my opinion. However, the problem I see with this double top is it's already in play. If you already took this at a double top or took a short there, then great. You know, actually, to be honest, I would already, if you're still short because of this move here, I already put a break-even stop just in case this guy decides to go lower. Okay, but the trend is still higher. Okay, so just keep that in mind. Not trend is still higher, the trend is still up. Now what I've done was I've drawn these three trend lines down here that could be probabilities of a breakdown. If you close below these bottom trend lines here, you have this trend line here, this trend line here, and this trend line here. If you close below this trend line, just keep an eye out, okay, because this guy could start heading lower. And then of course you got the validation, but then you got some support over here, which is 2107, and then you got another support level here at 2210. So as far as I can see, the trend is still higher, it's still going up, and you know, you want to trade with the trend. I counter trend trade a lot, but you know, I'm also in and out of the market very quickly. So I hope that helps. I don't know if that helps you any, but you also said something else about Head and Shoulders. Okay, maybe I'm not looking at the right chart. Maybe it's to include XIV. All right, so let's try and switch to the weekly here. See if that helps me any. Let's go a little bit farther out here. No, I guess I can't go any further. Um, yeah, I don't see a double top on the weekly or the daily. It looks like the daily has already done the double top. And you sent me this message yesterday. So, yeah, I don't see a double top in the XIV. The only double top I see is this one here. And the Head and Shoulders. Maybe on the Facebook page, if you can, what would be helpful is if you could actually take a screenshot, kind of draw lines on your chart, kind of show me where the Head and Shoulders, what part of the Head and Shoulders you're looking at. Let me look at the weekly, see if there's a Head and Shoulders on the weekly. I mean, there could potentially be a Head and Shoulders. I mean, that is possible. I mean, obviously this would have to be the head if it's a Head and Shoulders pattern, and this area here would be the right shoulder. So if this is the head, you're looking at this here, and it's, I guess this trend line here would be the neckline. Um, to me, I mean that looks okay, but to me, when the Head and Shoulders trend line is just this high, this steep, um, I wouldn't consider that a Head and Shoulders. But again, you know, technically, I guess it could be, because if you have the head here, this would be the neckline, and then obviously this would be the left shoulder. And I'm gonna guess that this is the right shoulder here, but I could obviously be wrong. Again, please forgive me if I'm not seeing it correctly. It's very difficult to see other people's analysis without actually seeing like a screenshot or a video or something like that. Hopefully you understand. I do apologize, but if you can post a picture on Facebook, on the 7 Minute Market page, then I could see it better and then probably do a better analysis on it for you. I do apologize for that. But this is what I see for the XIV as of now. Just watch for a breakdown here. If we break higher, if we break out of this upper trend line of this double top over here on higher volume, okay, like this we got higher volume, but then we didn't break out of it, then it may actually try to get to the 2539 level before getting another pullback. Okay, so just keep that in mind. And again, that's just my opinion. We have a lot of support here, so you just gotta watch for any breakdowns. If there's no breakdowns, then this guy should continue higher. Okay, and of course that's just my opinion, and this is just what I see from the charts. I don't know anything else other than that. Alright, so if you guys haven't already, I've already done the SPY analysis on the SPY. So if you guys want to just leave the video, because it's already in half an hour. I'm probably gonna still continue to talk about stocks and stuff because I don't know. I just feel like I'm in the mood for it today. We're looking at the Apple chart right now, and I've been talking about the Apple chart being weak ever since $680, which is around here. I think I tried to call the top of Apple around this one. You guys got to watch the previous videos, but actually went to about $700 before pulling back, which is a $20 difference, and it's not bad for a $600 stock. But it's no longer a $600 stock, and I've been saying that Apple has been weak and weak and weak, but the market's been going up and up and up. So in the tech sector, Apple being the leader, is not so much of a leader anymore. It's still a very valued stock, and Apple still is a big company, and does still have a lot of money. So fundamentally, and again, I'm not a fundamentalist, if that's the right word to even say, but I'm an Apple fan myself, but I would not go long Apple right now. Okay, and again, earnings seasons is coming up, so you just have to watch out. Apple's earnings will be out on the 23rd of this month. If you want to verify that, one place that I do go to find out earnings is finviz.com. There are obviously other websites that you can go to, but this is one that I use, which is finviz.com. You can locate, see it up there. And then what I normally do is I go to Screener, and then I just look for earnings date, and I will go for tomorrow. Okay, and then it's going to do a search, and we have Alcoa tomorrow releasing earnings. and a whole bunch of other stocks over here. So what I also like to do is, in addition to FinViz, I mean, FinViz is just a real quick what's going to happen to who's going to release earnings tomorrow real fast, right? There's another site which is that I go to and use, which is Yahoo. All right, so this is biz.yahoo.com/research/earncal/today.html. This is the earnings calendar. So let's see, April 8th is tomorrow, and then you'll have everybody here that's releasing earnings, and after market close, before market open, stuff like that you can just quickly view at a glance. And you just want to make sure, or let me rephrase that, I want to make sure that I don't make a trade at least within a week before that stock releases earnings, because you're going to see a lot of volatility before and after, mostly after earnings are released. Okay. Anyways, back to Apple. There is a potential that Apple could start heading lower. I mean, that's there's no question about that. But just watch out for earnings, because there's a lot of volatility with Apple and earnings. Okay. All right. What else can we talk about? USO, which is oil. If you look at the previous videos, or in the previous videos, and this happened a long time ago in 2012, I drew this triangle here. And what I normally do for triangles is what I've never seen anybody else do ever, but I normally do this, and I did this with the silver as well too. I'll show you that chart in a little bit. But what I do is, after I draw a triangle or a rising wedge or a falling wedge or descending wedge, ascending wedge, whatever you want to call it, I grab the middle, the closest pivot point to the middle of the pattern, and I bring it down to the breakdown point, and that is what my expectations of where the price will go down. Price actually broke down all the way to this level here, which actually turned out to be support, which is pretty good, and it's been pretty accurate for me. It's worked well. In any case, oil actually headed lower all the way down to this 31.08 level. I created this calculation in September of 19. It held up pretty well. We kind of just traded sideways. We broke out of here, but you notice the breakout didn't happen on volume, so it didn't last very long. We retested this gap window over here, and then we pulled back, went back into this gap window, and then we pulled back, closed. We had some support over here at this 33.11 level. We came all the way down, and then now I'm able to verify and validate that this trend line here is valid. Okay, actually all you need is 2 pivot points for a trend line, but we got 1 here, 2 here, and 3 here. Okay, so my analysis on the USO as of now, and this could change tomorrow, really depends on the pattern. Again, same like the other ones. You break down from here, you get a validation. Actually, you break down from here, and when I say breakdown, I mean a close. Meaning, even if we pierce it, if they buy it, if institutions buy it back or start buying and they close it above the trend line, then that's not considered a breakdown. Okay. If we do break down and we close over here and we get a validation the next day, then my target will be 31.08. Okay. Next, a friend of mine mentioned Baidu, so I kind of looked back to see what I did on Baidu back in the day, and it's kind of disappointing sometimes when I see this. I have an alert here for 116 flat, because I had 2 levels here, 114.25, and I also had a 116.66. Okay, I created this calculation on this day, which was 111, and I figured since it already hit it, I'd be too late to get in. So my next target for a short would have been 116.66. So I put an alert here for 116, and I'll just delete that if I can. Cancel alert. All right. Don't need that anymore. So if I had taken the trade at 114.25, you can see how accurate these mathematical calculations can be, but you can also see how inaccurate it could also be. So again, it's not like the holy grail or anything like that. It's just one of those things that sometimes it's accurate and sometimes it's not. We get a pullback from here. We come back up. We almost try to retest the 114.25, but it doesn't get there, obviously, simply because we got the 200 moving average right above it. Okay. Next thing I see here is this bottom trend line. Okay, so we have this top trend line and we have this bottom trend line, and we also, if I zoom out all the way over here, in 2010 we have this pivot point with all this consolidation here. This is going to be, in my opinion, some pretty good support. Let's see if I can load. Yeah, And to validate support and resistance, what I like to do is go to the higher time frame. And the reason why I do that is because the higher time frame is normally weighs more. So for example, if you look at the 10-minute chart and it's bullish, but you look at the hourly chart and it's bearish, I would trust the hourly more than the 10-minute, so on and so forth. The daily would trump the hourly and so on and so forth. But I wouldn't go out to as much as a month. Okay, that's just too long for me. Anything can happen within that time. Okay, so with that said, we have this pivot point here still on the weekly, and we have all this consolidation, and then we also have this trend line here. So we have 1, 2, and it coincides with this area right here. I don't have a mathematical calculation for this area, and in addition to that, we have these 3 moving averages just kind of hovering over the stock, giving a lot of pressure, a lot of resistance over it. So even if we did get a bounce over here, the moving averages will be very not too far behind. So if I did take this trade, it would probably be something along of an intraday trade, or a single 1-day bounce kind of trade if I decided to look at that. But it's just something that I'm looking at now. All I'm doing now, so you guys can close the video already, I'm just showing you guys what I'm looking at now and what I'm gonna continue to look at for the rest of the week. Alright, this is a stock of this is Apache APA, and I'm not necessarily going to make any trades, nor am I watching anything to make a trade, but I just wanted to bring this to you guys' attention. We had this resistance level over here. We also had this mathematical calculation 84.44, and one thing that the mathematical calculation will not work on is on earnings. Okay, that is just, I'm sorry, I will not depend on even my mathematical calculation. As good as it is, it's not as good as earnings. Okay, we have this up move over here, beautiful up move, and we have this nice beautiful consolidation pattern looking like that it might break out to even a higher level. Okay, or take a step back here. If we don't see all the way here, all we're looking at is this candle here. Here's a perfect example of how this calculation worked. Intraday, we had a pullback. Next day, we went right back into the 84.44, and then we had another pullback, and then we broke out of it. Okay, we broke out of it on higher volumes, so that indicated that it could potentially go higher. But we just consolidated sidewards, which is fine for a potential to move higher, right? That's just common knowledge. That's regular technical analysis. But what happened on this day? The earnings, boom, she falls. The 84.44 in this scenario worked. Okay, but I will tell you now that the 84.44 should not have worked, because this was a consolidation pattern to head higher. If I had taken the short trade on 84.44, I would have stopped myself out break even, because the next day I would have been in this day I would have been in the money. I would have had a break even stop. The next day I would have been stopped out break even, and this guy should have went higher. But instead it went lower because of earnings. And the opposite effect could also happen, where we have a resistance here, 84.44, so I would expect a pullback, but then earnings, boom, we head higher. Okay, I took the trade back here. Why? Because earnings was already up here. I had a lot of time. Okay, I had a few weeks or a couple of weeks, so I wasn't too close to earnings. So that's just an example I just wanted to show you. I'm not actually watching this stock or anything. This is a chart of Sears. Okay, Sears. So I'm just bringing up all these old charts that I used to look at. Okay, I made these mathematical calculations back in January 23rd. I have this, and again, if you guys want to look at the previous videos, you can. I think I talked about Sears. This is Fibonacci retracements. I normally use Fibonacci retracements just for validation. I don't really trust it too much. It doesn't really work for me. I know it works well for other people. It's just not for me. Anyways. So I made this mathematical calculation. It went right into the 53.64 level and then pulled back. Now Sears is shutting down a lot of stores, and I just can't see them being profitable. But again, I'm not a fundamentalist. This is just technical analysis. So what I'm gonna look at here is real simple. If Sears can get all the way up to 60.54, that's a long ways up there, long ways. But if the market stays bullish, there's no question that this Sears could actually head that high, and it might be just an extended, you extend this part to, I guess, 60.64, and then I'll probably take a short trade. Now, if Sears breaks down from this bottom trend line over here on volume, okay. So let me show you how I trade breakdowns here. If we get a close below here, and we get another close below that low, do I take the trade? No. I wait for at least 1 to 3 days. of it going down after a breakdown. So the breakdown of this candle here would be on high volume, the rest low volume, right? And then we get a reversal candle of some sort, and then we come back up to retest this bottom trend line. This here is where I take the trade. And you might be wondering, why? Why would I wait for that? Why don't I just, take the trade down here or over here? What's the difference? Well, the difference is this. It's really simple, actually. If you take the trade here on the bottom trend line, a short trade that is, okay, and it heads and it acts as resistance, then you're in the money. You have a break-even stop. That's how simple that is. If this guy closes above this trend line, recovers this trend line again, I stop out for a small loss. That's business, okay? That's how it is, right? In business, in any business, you make an investment, you could potentially lose that investment, but you want the investment to be small, and you want to know when to cut your losses, right? Simple. Anyways, that's SHLD. Alright, I'm gonna fly through this thing. Gee, I did like a few hours of analysis just for you guys on this video. I didn't think it'd be 40 minutes worth. So we have this trend line here. This is Ford. I'm sorry, not Ford. Bank of America, BAC. What I'm looking for is another breakdown of this bottom trend line here, and then potentially go long at the 200 moving average. But the breakdown of this trend line, again, you break down, you retest the bottom trend line here, take a short trade, and then go long at the 200. And depends where the 200 lands. If the 200 is around this area over here, by the time it comes down, then I may consider it. If it's all the way down here, I also may consider that. Alright, this is a chart of Ford. This is the one that I wanted to show you earlier that I was talking about. This is a very interesting chart here. If I just zoom in over here, we have this reversal candle, which is a doji. We have the volume. The volume is not higher than the past 3 days. So does that follow my rules? No. But if you take a look at it, it's right on this bottom trend line here. Okay. And I do have a mathematical calculation of $12.45 for resistance. But it was unable to recover. This closed at $12.44, which is 1 cent under the $12.45. This could potentially get a bounce, but even if it did get a bounce, you have these two moving averages right here. So how much of a bounce could you potentially actually get? 40 cents. That's pretty good, but are you willing to take that risk? Why? Because we're in a downtrend. Okay, we got a high, we got a lower high, and we got a low and a lower low, which validates a possible trend change. Okay, so just keep that in mind. That's just, again, this is just an example that I want to show you. Alright, this is a chart of the SLV. This is the chart I think I talked about this last week, not sure. But again, you just get the middle of any triangle, the middle of the closest pivot point, and then you put it down to the breakdown point. It's technically this candle here. And that's your expectation of, or my expectation of how low it should go. Not necessarily saying that that's how low it will go. Nothing's 100%, obviously. But, SLV trades around here and then ends up there. I won't get into these mathematical calculations right now. But then we started consolidating here, just like that. And then SLV finally breaks down. Okay? The breakdown happened on, tried to save it. So the 28th is when it started breaking down. When do I think SLV might have some good support? Now would be a potential time. I don't know if it's too late, but this double bottom here might be some good intraday support. Right now there's no pattern, so we want to look at what it does first. If it goes into this 20 moving average, if it goes into a 50 moving average, and if it's in a support and resistance area, which is this consolidation point right now, then I may actually initiate another short trade on the SLV. But that remains to be seen because there's no pattern yet. Right now I'm just running through some stocks. So let's see. So this is the XHB Home Builders. Again, this is a nice trend line over here. And they saved it. Okay, kind of like the SPY there. And it broke down, but it doesn't mean that it broke down. They saved it. So I'm just waiting for a breakdown here. You break down, you validate, you retest, and then I reshort, or not reshort, but then I short. And that's what I'm watching at. And this is just a lot of charts I'm looking at have this type of pattern right now. Alright, I'm already into 45 minutes. So last but not least, we have this bottom trend line over here. This is QCOM. Again, Same thing. The only difference with this, okay, just keep in mind, the only difference is if we do get a breakdown, we have the 200 moving average right here lurking. And this is going to give some pretty good support. So if we break down, hit the 200 moving average, come back up to the bottom trend line here, I think this one would hold water for another short. Okay? Anyways, thank you very much for watching these videos. God bless to you all. Hope to see you in the next week's video, and good luck to your trading. Or I might see you on 7 Minute Market Facebook page. And again, I may not respond very quickly. I may not respond at all. I'm very busy at work, but I'll do my best. So you guys have a good day, a good weekend, and a good week. Hope to see you in the next video.